Hi, I'm Schadt, founder of Liftr Insights. Today I'm joined by Jonathan Kaplan, founder of Numeris Capital. How are you, Jonathan?
Doing well, Tab. Thanks for having me here.
Yeah, well, we're going to jump into cryptocurrency and Bitcoin and have a great discussion today. Before we do that, give us a little bit about your background and how you ended up founding Numeris Capital.
Sure thing. I was born in Atlanta, but I was offered a very generous scholarship by the business school at the University of Texas. So in 2008, thank you, hook 'em. In 2008, I moved to Austin, studied information systems. I was a little scared to go into straight computer science, but it turned out to be a good call to kind of fit into that Venn diagram overlap between finance and economics and computer science and information technology. Because I got a sales job after university, but spending a few years in a big chemical conglomerate selling chemicals wasn't exactly what I wanted for my life. So after a few years of that, I started looking for other opportunities, and wouldn't you know, ended up getting an email from the chapter advisor at my old fraternity at UT Austin telling me that the chapter had grown so large that the university was mandating we hire a live-in RA, a house dad, to basically live at the fraternity and keep an eye on the undergrads, make sure they don't burn the place down. So far, so good. And so I moved back in, and I fell in love with the job, and I thought, you know, if I want to live in a frat house and spend a lot of time trying to make these boys the best they can be, grow the community, and give back, I need to be able to work for myself. I can't be in an office for 9 to 5. I can't travel for work. I need to find a way to make money from a computer. And so I had saved up some money from my years in sales, and I thought to myself, if I can figure out a way to invest this, then, you know, maybe I could make enough to where I wouldn't have to go out and get what my parents would call a real job. So I ended up checking out every book that I could think of in terms of, you know, the leading tech of the day, artificial intelligence, machine learning, neural networks. And I ended up picking up 2 books that changed my life. Digital Gold by Nathaniel Popper, a story about Bitcoin, and an investing economics book called Anti-Fragile by Nassim Taleb, which talks about the systems that the world is made up of. And Nassim sort of divides them into fragile systems, which lose value when exposed to chaos, disorder, and volatility, and anti-fragile systems, which gain from those sorts of things. And so I started looking around, and I thought, well, I was in business school in 2008 when the global financial crisis happened, and I didn't trust the stock markets. I didn't trust the existing financial system. I thought it was very fragile. And I saw that, you know, we didn't put anyone in jail. We didn't shut down any of the folks who had made that happen. If anything, the big banks swallowed up the smaller ones, got even stronger, and they're just doing the same things they've always done. So I thought, I want to stay away from that system, but I want to look for systems that gain from disorder. Long story short, I found 2. One was Bitcoin, because I noticed that Bitcoin grew in this series of bubbles where every time it would shoot up 1,000, 2,000% and then crash, well, it would always crash higher than the previous crash, and that what didn't kill it seemed to make it stronger. And I looked around and I found another system that every time everyone would say it's dead, it's over, it's done, well, it wouldn't die, it would just get stronger. And at that time, it was presidential candidate Donald Trump. So again, very long story short, I spent all of 2016 betting on Trump to win the primaries and then rolling that into the next. And after letting it ride on the general, put it in Bitcoin. Everyone thought it was crazy at the beginning of the year. At the end of the year, not so much. And so, you know, by the time the market blew up in 2017, I was sort of that guy in my social network. I had all these people asking me for help and advice, and eventually it was, hey, can't you just manage my crypto money yourself? Yeah. And so Numeris Capital was born.
Awesome. Well, so this begs the question, cryptocurrency. It's complicated to some people. Some people get a little bit of it. Very few people that I've met have the knowledge that you do. So give us an overview, the 50,000, maybe 40,000 foot view of cryptocurrency.
Sure. Yeah. So before we talk about cryptocurrency, I would talk a bit about money in general. And I would say that, again, at a very high level, money accomplishes 3 main things. It serves as a way to store value through time and space. Every day we all get up and we contribute value to society. We get paid for it. And generally we want to convert that into a way that that value can be saved over time. Well, you don't just store value, you also want to transmit it. If you have a service or a product that I want, well, I'm going to trade you some of that value that I've stored. So we need something, a money that can serve as a good medium of exchange. And then finally, we need a way to measure things and price things. And so it also serves as a unit of account. And Bitcoin, I believe, is the greatest store of value that humanity has ever seen. A lot of people don't really understand value storage as differentiated from an exchange rate. Value storage represents your ownership of a network, shall we say, whereas the exchange rate is what other people will trade you for it. Well, if you have your value stored in a currency like the dollar or the euro or the yen, well, if you have $1,000 in dollars today, you have $1,000 out of maybe, $23 trillion, however many there are. Well, next year that might be 1,000 out of 24 trillion, and then 25 trillion, and then 30 trillion, and then 50 trillion. And as we allow our central banks and our nation states to continue printing money, your share of that network grows smaller, and your purchasing power decreases as the total supply of that currency increases. Well, if you want to participate in the existing financial system, you really don't have any choice but to use currencies that are controlled by nation states and central banks that are constantly inflated to the point of being worthless. You can look at anywhere from Weimar Germany to modern day Zimbabwe, where governments have created so much money that the money's become worthless. Well, Bitcoin is sort of a different system based not on the political whims of a handful of financial elites, but on open source code that anybody can view and on a network that anyone can opt into. So with Bitcoin, you get a money that can't be inflated, can't be seized, and it can't be censored. Anyone can use the network as long as they're willing to play by the rules. And so I think for the first time in hundreds of years, we've been given a new money that can't be stolen from us and can't be degraded by a nation state or a central bank. And obviously, I think that's a very exciting thing.
Absolutely. So what's your strategy, your trading strategy around dealing with security and the volatility and really some of the more, I guess, cautious perceptions out there? Right. You know, how do you address those? That has to come up immediately with one of your customers or a prospective customer. Is the strategy to deal with all of the uncertainty for something that's relatively new compared to the traditional systems?
Absolutely. I think part of, I would give two responses to that. The first is sort of your more typical money manager financial advice, which is, this is an 11-year-old asset. It's still very new. It's yet to really prove itself over time. So I would allocate proportionally. I tell people only money that you can absolutely afford to lose. Maybe that's 1% of your net worth. Maybe it's just a little bit of beer money. But whatever it is, it needs to be factored into looking at your portfolio and allocated proportionally. Going along with that, I would say you need to make sure that you're sort of strapped in for the ride. You should know ahead of time that this is an asset that's going to fluctuate like crazy. And because of that, you can kind of anticipate, well, if I have a long enough time horizon, if I'm willing to allocate only a small amount, then you can sort of hedge against waking up one day and seeing Bitcoin being down 20%, up 30%, whatever it might be. And then the other piece of advice I would give is to really understand at a fundamental level what you're investing in. I have had friends who bought into Bitcoin because they thought they would make some money, and then the first time it falls 5 or 10% in a day, they panic sell, they get shaken out because they don't have faith. They don't really understand what they're dealing with. And my whole investment thesis really in large part is based on this idea of anti-fragility, that I'm not scared of what might happen to Bitcoin. I'm encouraged by what might happen, because the more it gets attacked, the more people try to hack it, the more that it experiences this chaos and volatility, the stronger it gets. And so you don't want your asset to sit there in its little bubble in a safe space where it never gets attacked. Maybe if you're a fragile system like our current financial system, you don't want any issues, any volatility. The world's going to find a way to introduce that eventually, as we've seen over the last several decades with real estate bubbles and tech bubbles. But with Bitcoin, I think you should get excited about, let's see if this thing can survive. And I think what we've seen so far in its history is that, again, what doesn't kill it has only made it stronger.
Let's talk. I have a few questions left for you. Talk a little bit about the future of it. And when I say future, maybe break it up into the next few years.
Sure.
And then obviously you're betting on the long game here. Right. I mean, and I don't know exactly if that's 10 years or 15 years, but just put a little time frame around where you think this trajectory is going.
Absolutely. So one of the most interesting aspects of new technologies is a concept that I would call the hype cycle. Generally, when you take the entire population, like say under a bell curve, not all parts of the population are going to adopt that technology at the same time. A handful of people will dip their toes in as early adopters. Yeah. The mainstream will slowly warm up, and then eventually you'll have people at the very end that will wait 20 years before they finally get internet access, buy a cell phone, whatever it might be. Well, what we've seen with most technologies, at least over the last 100 years or so, is that they grow exponentially. Most people are used to linear thinking. You go up one, over one, up one, over one. But with technological adoption, you hit this tipping point where things really start to take off. I think we're at that tipping point right now.
Okay.
And I think the reason for that is that most of the time when it comes to new asset classes, new technologies, Wall Street gets there first. And generally, you have your accredited investors with your seed rounds, and then you get your big banks to handle your IPO, and then it's generally the retail investor left holding the bag, or he's the last person to get in on this. Well, Bitcoin was sort of, up until very recently, this niche cryptographic experiment that was really only the purview of libertarians, hardcore crypto programmers, anarchists, really strange folk, but mostly your average person. I don't know if I would say average.
I don't know if that's average.
Certainly not your hedge funds, endowments, pension funds, big banks. And now we have this industry which is, ballooned to the kind of attention that it never expected to get 5 years ago. And I think that Wall Street is looking at this and saying, these guys are measuring their returns not in percentages, but in multiples. How can we get in on that? And part of the thesis I have on my website, Numeris.capital, that's linked there if anyone wants to read it, is that there have been hundreds of years of cycles by which financial capital, big money, Wall Street, whatever you might want to call it, gets involved in new technologies. And we're seeing all the signs necessary for that right now. We're building the infrastructure, we're getting the regulatory clarity, we're solving the kind of problems that are going to make major investors a lot more comfortable. And we are on the cusp of watching a tidal wave of money pour into a swimming pool's worth right now. It's going to be insane. Yeah, and I'm going to move to this next question, but to put that in perspective for our viewers, it's 150 billion to the goal is a 7 trillion. Right. So just when you talk about the tipping point, that's a big. There's a lot of growth opportunity. Exactly. People always want to know, am I too late? Did I miss the boat? And they generally don't do enough research. That's why I wanted to put it in perspective. There's still a lot of upside here. Absolutely. Yeah. And part of the fun, part of the difficulty is if you look around and you ask how many people are they invested in Bitcoin or crypto assets and what do they think of it, the vast majority are not invested and many are rightfully skeptical. And that's where the opportunity is. Yes. If everyone agrees with you, there's no opportunity. You're late. Right. And so right now, very few people agree with me. Very few people think that Bitcoin's going to eventually reach 100,000, $500,000, $1 million per coin. And I bought my first Bitcoin at $400 and people were laughing at me. Today it's 8,000 and people don't pay attention to a long enough timeline. We look at quarterly reports. We look at what we're doing this next weekend. We don't look at timelines of decades or centuries or millennia. But I think if you zoom out and you look at the big picture, big things are happening. Question I have for you that this is getting probably at the ground level to how you manage your day. So Liftr Insights, we provide data analytics services to investment institutions, hedge funds that want to invest in and around the cloud, internet-attached hardware in the cloud ecosystems, chips, accelerators, hardware that's really driving the cloud. And we do a lot of analysis and tee it up for them for the stuff that they either cannot do, or don't have the time to do. But it's high valued information. But these are data sources. What data sources are you using to drive this investment firm? Because albeit it's an investment organization, it's just a highly alternative investment organization, right? Absolutely. So what are the resources like? What's the resource pool? And if you're speaking to someone that wants to dive in and really, become the next Numeris Capital, or one day wants to work with someone like yourself and play this role, I mean, how do you go about aggregating the information and organizing it that's required to make these decisions? It's a great question, and I wish there was a service like yours for my industry, because I know that the information and the insights that you offer are so valuable. I think that partly because the industry is so new, and then also because it's open source. And so anybody can contribute, anybody can build on top of these protocols and build on top of these networks, that it's changing so rapidly. It's very similar to the growth of the internet. It was difficult to categorize and view all these different entrepreneurs and organizations that were creating websites and apps. And certainly people could not have predicted the things we saw in 2010 in 2000 or in 1990. And the advice I would give to folks is either find someone that you trust that can help you manage this sort of thing, and that's a big part of the value add for my clients, is that I send out a monthly video report, I keep them updated on the news, they've got my contact info if they ever want to call me up and chat, much like we're doing right now. If they can't do that, then I would say, you really need to know what you're getting yourself into. So find a couple of books like Digital Gold by Nathaniel Popper, like The Bitcoin Standard by Saifedean Ammous, Crypto Assets by Berninsky and Tatar are good ones. because there's not really there's not a Bloomberg terminal for this sort of stuff. It's changing so quickly, no one's in charge of it, there really aren't any rules, it's evolving in ways that are hard to predict, and there's so much happening at one time that the best you can do is sort of learn the fundamentals, pay attention to what's going on, or if you can't, find someone who is, because most mainstream journalists I should say, they don't understand the tech, they don't understand the economics, and then of course most economics don't understand the tech, and most of the tech guys, the programmers, they don't understand the economics. You really have to master multiple disciplines. You've got to know computer programming, database management, cryptography, investing, technical analysis, fundamental analysis, how to evaluate a network, and you're lucky if you can get good enough at those things to be able to make some money in this market. And so I've spent years trying to get up to speed on all those. I don't know if I've mastered any of them yet, but it's that stack of skills that all uniquely contribute to this space that are going to be important if you want to play a role in it.
Yeah, that's why I was asking. I mean, it's highly cross-functional. I mean, when you look
at
the tech all the way to the finance side and all the way to the data management in between, well, you're doing a great job at it, that's for sure.
I'm trying.
Yeah, you're doing a phenomenal job. So we thank you so much for being here today.
Absolutely. Thank you. It was a pleasure.
Yeah, it's been a pleasure.